All right, guys, what's going on? This is Carlos, CEO of GAR Capital. Want to go ahead and take advantage of a little bit of time that I have since the market is closed tomorrow to do our recap of the week. Really choppy week, as we know. Short week. Obviously, tomorrow is Good Friday. The markets are closed, like I said. Futures will be closed down. I saw on the CME group at 8 in the morning. I believe 8:30 in the morning or 8:15 in the morning. So I don't think that we'll have any kind of reaction to the non-farm payroll report that we'll get tomorrow. That'll be at 8:30 in the morning, but again, you won't be able to trade it. So obviously, we'll keep an eye on the report. We'll be tweeting as we go. My flight leaves tomorrow in the morning, but the team will tweet out the numbers as we get them in. So we'll just go ahead and recap what we got. We'll preview the upcoming week and go from there. I will not be on YouTube on Monday. I'll be on a flight back home from Colombia as I'll be out for the weekend. So again, the reason I'm doing this video. So the Dow closed up about 2 points, pretty much flat. Nasdaq held that 13,000 support. We're going to go over that here in a second. Again, that was the composite closed out 12,087, but the Nasdaq futures 13,154. Interesting enough, after hours they are down, but again, we did close on the upside. S&P 500 closed at 4105. ES closed at 4128, so a little off the highs as we closed at 4 p.m. the cash session. Volatility index below 19. Wow, 1840, down about 3.5%. Again, kind of seeing that churn down in volatility. It looks like really just in the market this week that maybe we got a little ahead of ourselves, hitting some resistance here at 4,200 or actually 4175 S&P. Again, those are still the February highs of this year. Pretty tough nut to crack there. Probably a lot of supply sellers there. So again, what are we expecting moving forward? Again, with the labor market showing at least some softening, we did have higher than expected unemployment claims. Tomorrow's jobs number will be important. If the labor market does slow down, that does show that demand is going to decrease. Again, that's going to affect earnings, but then it does help the inflation fight for the Fed. So the Fed does want to see a softer labor market. Like, make no mistake about it, that the Fed kind of wants to tighten until you lose your job in a way, because that's really the only way we can really or end supply side inflation. But again, that's where the CPI report comes in next week, and we're going to get that on Wednesday. We'll go ahead and take a look at the calendar. But again, based on strictly technicals, we'd held that 4,100 level pretty solidly. That was a level I was tweeting out and talking about it on the market blog. Just a tough tape in general to actually trade it with options. And we're going to go over our options trades as well. But again, back to S&P 500. Again, you can see that 4,100 level holding up. Again, right above that 50 MA on the 4-hour chart. Again, you can see the gray highlighted area. That's between that 4060, 48, 4080 resistance zone that we actually broke out of last week. But again, kind of it seems that not much of fear out there, as more of just retesting some levels. Again, if we do get a little bit more weakness, we're going to use 4,100 as our support moving forward. Maybe an opportunity to retest that level, and if that support does hold, then definitely 4,200 is in our view, at least in a seasonally strong April. The only issue is that we were supposed to have a seasonally strong week, and we were chopping around, so the seasonality didn't really work that well, at least this week. But let's see if we retest 4,100 next week. If the buyers can defend that, then we would expect a little more upside again to 4,200, and after that, it's really in the market's hands of what happens, because that's a really big resistance level, and if that breaks, you either have a rejection from that level, which is definitely possible. We've had that with really good CPI numbers. Maybe we get a really great CPI number on Wednesday. That gives us a shot to 4,200. That might probably be a place I'd probably want to short, at least short term, see if we can retest 4,100 again, see if the buyers defend that level instead, and just go from there. We may just get slow churn Monday and Tuesday into the CPI number, since it's a very binary event. If inflation is still relatively too high, now the Fed is in a tough place. They have to raise a little tighter or longer. Forget rate cuts. But again, if that inflation number comes in softer, maybe we get into that 5 handle range, maybe the low 5s or something like that, 5.5, 5.2. Again, total assumption. But if we get to somewhere around those levels, that would alleviate the hawkish tone or the hawkish rhetoric from the Fed and kind of give the market a little bit of reprieve that, financial conditions may ease moving forward as we see kind of the bond market front running the Fed in a sense because of the what's been happening in terms of the bank failures, SVB, and I think the other one was the Signature Bank. So I want to pivot now to the bond markets, and again, we are now above the 50 weekly MA on 10-year Treasury bond futures. So again, this is the actual value of these Treasury bonds. And again, I've been saying that I've been bullish Treasury bonds for a while because it's still a play that even if we do get that recession fear materialize because of the inflation fight and the tightening of monetary conditions, government bonds are going to be the hot commodity in a sense because it's still giving you that rate of return and still relatively safe in comparison to risk assets like equities. I've been reading Bloomberg, watching CNBC, watching Bloomberg as well on television, reading the journal. And again, it's really kind of the same song and same dance. It seems that these fund managers on TV are still kind of trying to play that same 2022 playbook in terms of investing in value. But I think that value sentiment has been a little stretched, and this is why, kind of in a sense, the value now is going to more mega cap. The companies with a lot of cash on their balance sheets that's still growth. Microsoft, Apple, Google. Google caught a bit this week. Meta has been performing very, very well. Amazon, I wouldn't lump them in that, but again, Microsoft, Google, Meta, and Apple, in terms of cash, those are the guys that I would look at as, those are the ones where people are looking at as a safe haven because they kind of give you that hybrid, still growth appreciation in the stock, innovative, but yet still has the balance sheet to cover dividends or capital growth due to stock buyback. So again, we'll know more as we get the earnings come in. But again, as an Apple shareholder, we haven't had a lot of growth in earnings. It's really just market multiple expansion for the most part, where things are starting to get a little expensive if the earnings do not catch up. So again, this earnings season in April will be very crucial, in my opinion, to kind of set the tone for the rest of the year. Because if those earnings come in softer than expected, then our price to earnings multiple are a little out of whack, and we're going to start stretching above historical patterns in a rising rate environment where it doesn't justify owning a Coca-Cola here, paying a 2.2 yield when I can get a 2-year Treasury yield paying near 4%. Again, we're looking at apples to apples in terms of what I can get in guaranteed rate of return while still, managing my risk. So I still think bonds still have a little more to go, even if the Fed is tightening another 25 basis points, which would be in May, not in April. But again, I'm still sticking with the same thesis. Again, lower yields and lower dollar. Let's go to the yields. And again, we closed below 3.3%. My goodness, remember when we were above 4 just a couple of months ago? So again, we're still looking at that 3.143% yield. If we do break that, 3% is definitely in our watch in front of us, excuse me. And then we may just chop around here for the rest of the year. I wouldn't be surprised that we may just chop around 4,200 to 4,300, and that might be the top for the year. Again, we could go a little higher, but a lot of this has been front running because of the banking issue. The expectation is that Fed is going to just make it unlimited money. And make no mistake about it, the market is addicted to cheap money. This is what causes inflation, other than just supply chain risks or supply chain issues. But we can see that the bond markets are already pricing in Fed cuts. So what the bond market is saying is that a recession is coming as yields are continuing to fall down. But yet this is kind of, again, that feedback loop where if the labor market is relatively strong and bank and companies are still flush with cash, some are or some not, again, and it makes it easier to borrow money. This is where tech shines, because if bond yields continue to fall, growth is going to start, getting more and more of the capital flight, even as money market accounts are getting really, really bloated. The last time we had this high balances in money market cash funds was really 2008, 2009, and we know what happened after that. We had the bounce. So again, I'm kind of looking at both sides. People are doing more capital preservation. We don't know what's going to happen. But then you have the other side, we're saying that, hey, we may have some opportunities here. But I still think it's a trader's market. It's not really meant for investing quite yet, regardless of what NVIDIA has done. NVIDIA has been great. And again, I've been saying to take some profits on NVIDIA. But again, it just seems like a very big trading range where we're in the upper band of it. Now, in a sense, with all this price action that we've had to the upside, do these multiples make sense in this earnings environment? We will know in end of April into May. It's going to be a big one, so we're going to be very prepared for it. So again, lowering yields is the key. Let's take a look at the dollar. And again, take a look at the dollar. You can see kind of holding up to at 102 level. Once we do break 102 level, which it will, again, this is before the BRICS stuff that was announced. We were saying this back to last year, that the dollar is the key. Again, if you want risk assets to go higher, if you want Bitcoin to go higher, we need the dollar to weaken a little bit. See how much we have jumped from 90 to 114 from just literally, well, less than 11 months ago. So again, maybe we retrace back to 90 and get us back to that kind of a sense where, asset prices can have that differentiation in kind of a swinging pendulum moment where, stocks can bid because of a weaker dollar, since we want capital to fly into riskier assets if things get better in terms of inflation. But a lot of it hinders on this CPI number that we're going to get. So let's go ahead and get to the trades that we had this week. The first one that we had was IWM. I want to break this down because it's very important, and it's kind of like a kick in the balls, just kind of repeating it over and over. So we got into this trade on Monday looking for the break here. We actually got our alert here. Really quite under. We got around 179.30, excuse me, right over here we broke out, 179.50. That was my alert. We broke out of it and we continued higher to 179.76 that Monday. We got in expecting we would get the continuation. We bounced overnight. We were right here, this pretty much the same zone we were in the morning. We were actually up 3% on IWM. Right at 9:30, they sold it off from 179.26 to settling around 175. Broke that 200 MA on the 1 hour. Just had to get out of it because of the expiry. The expiry was for this week, so we had to take that L, minus 80%. Not the best way to start the week, obviously. The next trade we got, and I'm still holding it, is Tesla. Now again, this one is a little tricky because you're probably saying to yourself, Carlos, we broke support. And again, I'm down 90% on it. We were down 81% the day before. So at this point, we're risking, 10% to just trying to make something back. We did have a nice rebound in the market, obviously, with NASDAQ holding that 13,000 level. So again, right here, we closed around 184.68. You're probably thinking to yourself, man, we blew it. And again, basically picked the wrong gap to fill, which was 183.40, which filled and then bounced. So again, we're still kind of stuck in this downward channel. And again, what we want to get is to above 190 as soon as possible. If maybe on Monday we get some bids, maybe we have a good jobs number where it's a little weaker than expected, maybe it gives us a little bit of dovishness heading to the Fed next month as the labor market weakens. Maybe inflation gets a little better on Wednesday, a CPI number. We get a nice short squeeze, we get a little bounce, maybe to 195. I don't think we'll get to in the money next week. But again, if we can salvage minus 60, minus 50%, I think that's worth the wait. Give us a couple of days to see if Tesla does get a little bit of a squeeze higher with the NASDAQ. And if there's a company that could do it in terms of a stock, it's really Tesla. Tesla is in its own universe in a sense, kind of the Bitcoin of the mega cap options side. We did play Google today, and Google was very well done. And it was something that I was pretty worried about doing this trade because we had such a rough week in terms of options. But once we broke 108, that was my alert. The only issue I had about this one is that I stepped out literally on lunch to go get a haircut, thinking to myself, well, I have my alerts. If anything happens, I'll be ready. I'm literally driving out and traffic, and I see the alert break. I contact my team. We discuss it. Within a couple minutes, I sent it. I didn't think we would get it today. I'm glad we did, even though it's for next week expiry. Once we got above that 40%, I wanted to hold a little more, but then I remembered about what happened to us in terms of QQQ and SPY and Google actually last quarter, where we had SPY up 25% and we had Google up 37% last time, and I didn't take it and we reversed. Those are two L's in the last quarter that we could have easily avoided. That's something that we want to fix in terms of the service. We want to make sure that those kind of issues of just taking the profits is not going to happen again. We want to mitigate that, and we don't want winners to turn into losers. That's literally the worst thing that could happen because you had an opportunity to take those profits. So breaking that 108 level, we made the call. We said we're going to get to 110 for next week, rightly priced at around 97 cents, and it soared. It soared to 109.53. I thought we would get to possibly 110 by next week. I put the alert up, and there was a gap to fill. I didn't see if that gap was filled on the daily. I don't think it was. There is a gap fill at 110.98. It has a little more room to run. I got out as high as, well, we got as high as 80, then it got to 109, and I thought to myself, if we get below 109, I'm taking it. And I got around 50% on the full position. So that does help, and I wanted to make up for Tesla possibly, if not IWM, but we just didn't get that continuation to get it this week. And I just had to make a judgment call on whether do we just, hold it for next week, see if we can make up a little bit of IWM, maybe make up Tesla if we get a little bit of a run on Google, because it looks really set. It looks set to fill that gap too. And really the last times we've played gap fills, it hasn't worked. So imagine my thinking when we're doing it one more time. Thankfully this time worked, and we caught it. And I think some of you guys missed it, unfortunately. And that's what I hate, is those trades that are so quick, but I don't have a pause button for the market, unfortunately. So we cannot just have to trade it as it lays. So, but maybe Google pulls back a little bit on Monday. We'll get a shot at trading it again, and we'll target 110.98. Who knows? We'll see what we can get. Maybe we get that push. But again, Tesla I still have for next week. So again, I'm willing to hold a little bit, see if I can salvage something. Google was ending the week on the right note, in my opinion. Going to NASDAQ futures, which we traded, again, pretty much, I mean, it was great, but we fought for it. Let's be honest. We fought for this one. And again, really what we were targeting was 13.3. Overnight, we got tagged below 13,000. We had the stop loss at 12.9. The best thing we did in this trade was widen that stop loss, because it seemed like they were stop hunting around that 13,000 level. We did not get stopped out. We had that nice boost right around 1 to around 2 p.m. This is the same time Google started pushing a little higher. We slid that stop, and we just were happy at getting 100. We got it at 13.50. We got as high as, wow, I was looking for 13.2. We got to 13.192. So again, that's about 140 points. If you held, we took 100. And we kind of ended up at the same place where we closed, right now up about, if you took it, say 100 handles, 107 handles. So I think it was a good exit all around. We'll get another opportunity possibly. This week really showed that, having the versatility of other options out there, no pun intended. You have stock options to trade, but in a choppy tape, pretty difficult. The only reason we got Google is because we had a continuation. Continuation to the downside on Tesla. I just basically got that wrong, but let me see if we can get a little bit of a reprieve. And IWM was a complete rejection. But at least NQ, we played it right. We could have easily played ES2 from 4100 to 4140 to 4150. We decided to stick with NASDAQ futures. That's the one that outperformed today, so it was a good setup and a good call. Going to Euro USD, we also traded Forex. Again, kind of using the themes, lower rates, we're expecting tech to bounce, Euro coinciding with the S&P. The Euro was pretty much flat today. Didn't really run in that one-for-one correlation either. Going into Monday, we got into Euro USD. Our target was 110, and we kept sliding our stops, and then we got stopped out right around 108.90 or so. So I think we got like 15 handles. We pushed higher, and then really towards the tail end of today, we pretty much got back to the level where we stopped out, or our entry were from before. So again, 109.18. I still think we get to 110. Let's see how we open on Monday. Maybe give us an opportunity to kind of go long again, as I expect a Euro USD to do so, since I am short the dollar pretty much in aggregate. So that's where we are for the week. Let's go and take a look at the week itself in terms of Forex Factory. I still got to do the watch list this upcoming week, so I'll post it over the weekend. I'm going to take my tablet to Colombia. So let's go ahead and go over the expectations. Monday after Easter, again, I don't expect a lot, but we'll see what happens. Again, more Fed chatter on Tuesday. We have Fed speakers, no more blackout period. We have the CPI on Wednesday at 8:30 in the morning. We have a core CPI as well, year over year. 10-year bond auction as well. That'll be important for yields. We'll be watching tech and yields closely for that. Meeting minutes, again, we kind of already read on the Wall Street Journal that this was kind of like the closest it got between raising this and pausing. So again, let's see what the meeting minutes say about the dovishness approach of the Fed. Do they see this bank stuff as a blip? Do they still want to continue moving forward? Again, we hear a lot of things in speeches online or on TV, but again, the meeting minutes is really the meat of it, all of the information that was spoken in the last FOMC. Remember, this is going to be the biggest hint that we'll have really for the month of April, since there is no Fed in the month of April, only into May. Core PPI and PPI, Producer Price Index, will be on Thursday as well. We have a 30-year bond auction. We have retail sales. I expect that to be weak on Friday, April the 14th. So we'll see where we get from there and some consumer sentiment and expectations. Tomorrow we'll have the non-farm payroll report, 228,000 jobs added. The previous number was 311. Unemployment rate is expected to stay the same at 3.6% with an average hourly earnings month over month of 0.3%. In terms of shorting this, I don't want to short this market here unless we really start making some meaningful breaks below 4,100, if not 40.80. I think that this is just retesting and we're probably more likely going to go higher. Again, once we get to 4,200, all bets are off because then we'll probably see that we'll reject a little bit and start retesting some more. Again, a trader's market, a choppy market. The only regret I have was really just sending that trade on IWM because it was wrong. Any other time or circumstance, I would have sent that because we've been setting those up for a while. It just reversed on us. Tesla the same. Let's see if we can salvage that. But Google, same deal. Kind of the same as IWM, except this time we got continuation. Nasdaq held the 13,000 level, and Euro USD was just choppy as hell. So kind of a mixed week. I'm not proud of it whatsoever. I'm glad that we got out on a green note. But again, my expectations are higher. We just got to be better. And we got some making up to do, especially with Tesla and IWM. We got to make up for that and move forward. And we'll see what we get moving forward on Monday. So I will be out on Monday. But again, I will catch you guys on Tuesday. The guys will be in, the team. Anthony, Kevin, Nick, Juan, and Nick will be there to answer any of your questions anytime on the Discord server. Thanks again, guys, for the opportunity to really help you guys and explain the market. I love doing it. And again, I really appreciate you joining and enjoying the service. And if you haven't joined the service as of yet, because this is going to be on YouTube, we look forward to your business and hopefully we can meet the expectations that you have for us. And if not, more great stuff to come on our Instagram, Twitter, and our YouTube channels. Have a great rest of your week. Enjoy your Easter holiday weekend with your families. I will catch you guys on Tuesday for the morning note. You can make sure to message me on our Discord server if you have any questions, or you can DM me directly at CEO GAR Capital on Instagram. Mine has the blue check mark. And there has been already a scammer trying to pretend he's me under my story. So if you can report and block that, that would be great. Thanks again, guys. Enjoy your weekend. We'll see you guys next week. Cheers.